Thank you very much for viewing today's briefing for our financial results for the fiscal year ended March 31, 2026, and our medium-term management plan. My name is Koda, Representative Director and President. I appreciate your time today, and I will do my best to make this worthwhile. Now, I will discuss chapters 1 through 4. First, I will give our business outline, and then Executive Managing Officer Kasugabe will explain our consolidated results. Then I will explain our medium-term management plan ATM 2028 and our consolidated financial targets again. Now, I will explain our business outline. First, let me give you a general overview of our business. To begin with, I would like to discuss our growth trajectory. Since our founding in 1916, TSUBAKIMOTO KOGYO has courageously transformed and innovated to meet the needs of the times and has grown in scale by leveraging the strengths of our business. In the 1990s, we expanded into overseas markets, including Singapore, and took on new challenges to transform and reform for a new century. Subsequently, we reorganized our sales department from a divisional system to an area system, and by promoting sales companies' regional initiatives and their cooperation with the divisional headquarters, the sales companies expanded their earnings, which led to further expansion of our consolidated financial results. For the fiscal year ended March 31, 2026, we achieved record levels in net sales and profits. We believe this is proof that the direction we have been taking has not been mistaken. In October 2026, we will celebrate the 110th anniversary of our founding and start the new medium-term management plan ATM 2028 to advance to the next stage, build a solid revenue base, and increase corporate value. I will explain our corporate purpose. Medium-term management plan ATM 2028 is positioned as an action plan based on our corporate philosophy and mission statement. In our corporate philosophy, our motto is to contribute to society and seek to prosper by tirelessly developing new products and seeking out new sales channels. On the other hand, in our vision, we aim to provide our customers with advanced technology for optimum machinery. Furthermore, in our management policy and basic sustainability policy, we aim to grow earnings over the medium to long term and continuously enhance our value as an enterprise. We will further pursue our corporate purpose to achieve sustainable growth. I would like to explain our three main businesses. The power transmission business is our core business, offering a wide range of parts for power transmission components, with an overwhelming product variety and unshakable strength built up throughout our long history. We provide solutions connecting to clients through our product proposal capabilities. The facility and equipment business is centered on material handling, which is the technology to move things, by leveraging our engineering capabilities, and provides comprehensive solutions, including installation and after-sale services. It is positioned as a key business for handling labor shortages and contributing to solution of issues faced by society. The industrial materials business pursues high added value combined with originality through product development capabilities speaking to our history since our founding. It handles a wide range of products, including nonwovens, processed resin products, and general consumer goods, and supports your business from scratch with our unique development and supply chain building capabilities. I will explain the business model for each of our businesses. In a nutshell, the power transmission business has the trading company power due to an abundant product lineup and the profit margin generated by our brand power, The facility and equipment business has the engineering capabilities to provide total technical support through its engineering and construction supervision divisions. And the industrial materials business has the power to coordinate products with originality. As a general trading company specializing in machinery and technology, our mission and purpose are the same across all business models. Through unique business models for each of our diverse businesses, we provide optimum solutions for building connections, as well as new possibilities and value. I will explain our overseas business with a focus on the ASEAN region. This graph shows trends in overseas sales and the ratio of overseas sales and net sales from FY 2021 to FY 2025. Based on compelling product appeal and solutions functions cultivated in Japan, we support business streamlining and overseas business development through overseas networks and a trade management system. Aiming to have the quality of products and services on par with those provided in Japan, we have established a comprehensive service spanning delivery, installation, and maintenance in cooperation with overseas manufacturers and partners. In addition, by being sensitive to domestic demand through a dedicated department focused on developing imported products, we are expanding our lineup of high-quality products from Europe, the US, Taiwan, and other countries. As part of our overseas business strategy, aiming for 20% ratio of overseas sales and net sales in the future, we will strive to expand overseas transactions, including those involving imported products. Let me discuss our cooperative relationship with TSUBAKIMOTO Chain, a world-class chain manufacturer, which is a topic we are often asked about. While TSUBAKIMOTO Chain and we are important partners due to our shared background of being founded by siblings, the two companies have each charted a unique path in mutually distinct fields of sales and manufacturing. Based on a century of strong collaboration, we have developed products that meet market needs through joint efforts, focusing on global market-leading products and material handling equipment, including conveyors and sorting equipment. In particular, in the area of timing chain systems for automobile engines, we have built solid alliances to respond to demand changes for about 70 years, shortly after domestic production began, and have evolved in tandem with the development of the automotive industry. In addition, as the shift to EVs continues, we are developing products for in-vehicle components and peripherals through Kaizen multiplication, which combines the marketing function of a trading company and the core technologies of a manufacturer, which are our respective strengths. The two companies continue to grow, maintaining a century of strong collaboration. The TSUBAKIMOTO Chain Group is continuously making up around 30% of our net sales, and handling strong core products is directly related to our strength. We will continue to further strengthen our relationship and work to develop new markets and new products to achieve further growth for both companies. Let me explain the strengths that give us competitive superiority. Establishment of Engineering X solutions is realized through the interaction of three strengths: staff able to make proposals, one-stop system, and transaction base. By delivering a comprehensive, seamless service from identifying latent needs to implementation, we aim to drive order growth and stabilize revenue through maintenance, repair, and other recurring services. The staff able to make proposals is the first strength, providing solutions for issues through understanding of customers' industry and exploring new products. Another feature of this strength is optimized solutions from technically proficient staff. The second strength is our one-stop system, which allows us to provide solutions for the whole life cycle, optimum coordination from entry to exit at factories and warehouses, and new processing, development functions, as well as integrated support for operation and maintenance. The third strength is our transaction base. With an extensive business network covering all types of products and customers, and solid relations with top manufacturers, we support an industrial and social base. The source of our competitive superiority is the virtuous cycle of acquiring new challenges and expanding our solutions through the interaction of these strengths.
I am Kasugabe, Director and Executive Managing Officer overseeing corporate administration. I will now present our consolidated financial results highlights for the fiscal year ended March 31, 2026. 5 consecutive years of increases in net sales and each profit category have led to the highest ever figures. Net sales totaled 131.0 billion yen, plus 5.4% year-on-year. The increase in net sales is thanks to sales recorded from the plentiful backlog of orders being fulfilled largely on time. Operating profit was 6.5 billion yen, plus 8.2% year-on-year. Gross profit increased on the back of increased revenue, resulting in increased operating profit. In addition, ordinary profit was 7.1 billion yen, plus 8.9% year-on-year. Ordinary profit exceeded the level targeted in the previous medium-term management plan, clearing 7.0 billion yen for the first time. Profit was 5.0 billion yen, plus 7.1% year-on-year. The improvement in profits at all levels, driven by increased revenues, was a factor in the increase in profit. I would like to explain our results by segment. We have adopted an area system to promote cooperation among businesses and to strengthen our sales force through close ties to local communities. The Eastern Japan headquarters oversees Hokkaido, Tohoku, Koshinetsu, Kanto areas, and its net sales were 44,789 million yen, minus 0.2% year-on-year. Power transmission parts for the general industry were robust, but a shift in demand for automotive-related parts and parts for semiconductor manufacturing equipment resulted in a year-on-year decrease, which affected net sales. On the other hand, orders in fields related to facilities and equipment were solid and increased year-on-year. Segment profit was 2,883 million yen, minus 10.7% year-on-year. Net sales account for approximate 34% of the total. The Western Japan headquarters oversees Hokuriku, Kansai, Chugoku, Shikoku, Kyushu areas, and its net sales were 51,007 million yen, plus 10.7% year-on-year. Demand for power transmission parts across industries was firm, and parts for facilities and equipment recorded smooth sales for large facilities in China and at other facilities, resulting in increased sales. Segment profit was 3,463 million yen, plus 17.3% year-on-year. Net sales account for approximate 38% of the total. I will explain the performance of the Central Japan headquarters and the Strategic Business Development Center. The Central Japan headquarters oversees the Tokai area, which accounts for approximate 14% of total sales. Net sales totaled 19,578 million yen, plus 7% year-on-year. Sales of power transmission parts increased, mainly for heavy and general industries, resulting in increased net sales. For the facility and equipment business, the order backlog steadily turned into sales for heavy industries, automobile-related sectors, and food industries, resulting in a year-on-year increase. Segment profit was 1,334 million yen, plus 18.9% year-on-year. The Strategic Business Development Center is responsible for new product development in overseas and material businesses, and its net sales account for approximate 14% of total sales. Net sales totaled 19,957 million yen, plus 8.2% year-on-year. Thai and Chinese subsidiaries saw a year-on-year increase through sales for specific large projects. Overseas direct transactions increased in the facility and equipment business, resulting in increased net sales. The material businesses grew year-on-year. Segment profit was 709 million yen, plus 29.5% year-on-year. I will now explain net sales by business and region. Net sales from the power transmission business totaled 56,825 million yen, minus 0.9% year-on-year. The proportion of this business accounted for 43.4% of total sales. Sales to general industries were solid, while sales to automotive and semiconductor-related industries decreased, resulting in lower net sales. Net sales from the facility and equipment business totaled 63,599 million yen, plus 11.9% year-on-year. This business accounts for 48.5% of total sales, and increased sales in the automobile industry and logistics-related segments are a factor in the increase in net sales. Net sales from the industrial materials business were 10,607 million yen, plus 5% year-on-year. It accounts for 8.1% of the total, and an increase is due to the recovery in demand for general consumer goods. By region, total sales in Japan amounted to 113,713 million yen, plus 4.5% year-on-year, accounting for 86.8% of the total. In addition, sales in Asia totaled 15,490 million yen, plus 17.6% year-on-year, accounting for 11.8%. Sales to Asia increased significantly due to the recording of high-volume sales of the polarization panel production facility destined to China. Meanwhile, other net sales totaled 1,829 million yen, minus 21.2% year-on-year, accounting for 1.4% of total sales. Year-on-year, the power transmission business declined slightly, while the facility and equipment business and industrial materials business outperformed the previous year. Let me explain shareholder value indicators. The graph shows changes in ROE and PBR. The most recent ROE is 10.7%, PER is 9.9 times, and PBR is 1 time. ROE has maintained a high level against a backdrop of rising profit and has remained above shareholders' equity cost. We also aim for an ROE of 12% plus in the final year of the new medium-term management plan. The company estimates shareholders' equity cost to be in the range of 6 to 8%, based on a CAPM-based approach. We target a PBR of more than 1 and will continue to increase ROE and reduce shareholders' equity costs. We would like to increase the current share price level and proactively disclose information to ensure a broader understanding of our business and growth strategies. Furthermore, to encourage holding of shares in TSUBAKIMOTO KOGYO, we will proactively increase dividends and acquire treasury shares in addition to maintaining the shareholder benefit program.
I will now explain the Medium-Term Management Plan ATOM 2028. First, I would like to share with you a review of the previous Medium-Term Management Plan ATOM 2025. In ATOM 2025, we prioritized ROE and set out the target of increasing ordinary profit. Ordinary profit for the final year was 6.79 billion yen, far exceeding the 5.3 billion yen target at plan inception. In addition, ROE was 10%, meeting the 10% target set at plan inception. The ordinary profit and ROE figures exclude special factors, such as temporary impacts. On the other hand, human value added was 112, exceeding the target of 108 set at plan inception. Ratio of male employees taking childcare leave was 100%, meeting the target set at plan inception, but other non-financial targets were missed. Financial targets were achieved in excess of the targets set at plan inception through the implementation of priority measures, such as cultivating core industries and strengthening approaches to new fields. On the other hand, issues still remain with non-financial targets, as human capital indicators were missed due to the limited linkage between management and human resource strategies. Addressing these issues as management challenges and through an increase in earning power and better capital efficiency, the Medium-Term Management Plan ATOM 2028 will aim to maximize corporate value. I would like to explain the basic policy of our new Medium-Term Management Plan ATOM 2028. Our vision is to become a company that creates future value for the industry as a general trading company dealing in machinery and technology. For the previous medium-term management plan, we implemented management that focuses on ROE and keeps the payout ratio in mind. In the medium-term management plan ATOM 2028, with a basic policy of building a resilient revenue base and an enhanced financial strategy, we are promoting three basic strategies. Furthermore, we aim for an increase in corporate value and co-creation with stakeholders for the future. The first basic strategy of the medium-term management plan is to increase value in business areas, and we will pursue Engineering X solutions. The second is to optimize capital structure while enhancing shareholder returns, and we will promote a cash allocation strategy. The third is to further advance ESG management, and we will actively invest in human capital. We will further refine the strength to produce competitive superiority through these three basic strategies and achieve an increase in corporate value. I would like to explain the quantitative targets of our medium-term management plan ATOM 2028. Under the basic policy mentioned earlier, we have set new financial targets to be achieved in the 3 years from FY2026, fiscal year ending March 2027. The final year targets for ATOM 2028 are consolidated net sales of 150.0 billion yen, operating profit of 7.5 billion yen, ordinary profit of 8.0 billion yen, and a ROE of 12% plus. In addition, we will use an operating profit margin of 5% as our benchmark and aim to maintain a margin of 5% plus also from 2028 onward. The graph on the right side of the slide shows the change in operating profit margin. Through these financial targets, we will strengthen our revenue base and improve capital efficiency. I will explain recognition of the external environment, business opportunities, and threats that form the premise for our basic strategies. Driven by growth investments in EVs and next-generation mobility, semiconductors, logistics automation, and environment and energy-related sectors, rising demand for automation, and advancements in AI and robotics technologies, demand for facilities and infrastructure is growing. In the aspect of politics, opportunities include increased domestic investment through measures to strengthen industrial competitiveness and the expanding market for renewable energy and hydrogen infrastructure due to decarbonization policy. For the aspect of economy, while demand is boosted due to expanded investment in growth industries and expanded infrastructure exports, such as environment-related fields and logistics, manufacturing equipment, threats include pressure on revenue by soaring raw material and fuel prices, and destabilization in demand for facility investment due to fluctuations in the economy. For the aspect of society, opportunities include the growing demand for labor-saving and automation facilities and the increasing demand for environmentally friendly products. Threats include difficulty securing human resources, stagnation in skill transfer, and declining shipping capabilities due to an increasingly serious shortage of logistics industry workers. On the technology side, we recognize growing demand for smart factories and automated transport systems as opportunities. On the environmental side, opportunities include market expansion for environmentally friendly products and growth in the recycling, resource-saving business, and growing demand for climate change adaptation measures. On the other hand, threats include the risk of extreme weather, intensification of natural disasters, as well as increased costs due to strengthened environmental regulations. Taking these opportunities and threats into full consideration, we will concentrate resources on areas with a clear path to success, provide enhanced value, and strengthen our human resources and organizational foundation. Let me explain the first basic strategy, value enhancement in business areas. First, I would like to inform you of the intent of leading domains and growth areas. We have positioned the leading domains as areas of existing dominance that support current revenues, and the growth areas as areas of focused expansion to capture future growth. By separating the two areas in this way, we have indicated a policy to both strengthen the short and medium-term revenue base and capture medium and long-term growth opportunities. Although the growth image on the right side of the slide shows an expansion of business scale and sales, the growth we are aiming for is not limited to quantitative expansion. We are also looking to improve profitability. We will expand our business domain by expanding revenue base in leading domains and by prioritizing allocation of resources to growth areas. By working to enrich product capabilities in both areas and to provide comprehensive solutions and higher added value, we will enhance the quality of growth and achieve sustained growth. In our efforts for higher added value, we will develop new products that reflect changes in the external environment and promote greater seeking out of suppliers. Furthermore, we will work to enhance comprehensive solutions, including preventive maintenance and maintenance services. Here is an explanation of our policies in each of our main fields. In the automobile field, we position the area around existing mobility product lines as leading domains and will develop next-gen mobility facilities, related parts as growth areas. In the semiconductor field, peripheral fields to manufacturing equipment are considered leading domains, and peripheral fields to advanced post-processes are considered growth areas. In the logistics field, We have positioned EC fulfillment automation as a growth area and will continue to expand our product capabilities. We will work to expand our business areas, with labor saving and food tech positioned as a growth area in the food field, as well as the biomass, recycling stable operations field as a leading domain, and decarbonization, resource recycling solutions as a growth area in the field of environment. Let me explain the second basic strategy, enhanced financial strategy. First, let us discuss cash allocation. We will undertake organic investment in human capital and other resources to enhance our existing businesses and internal resources, and inorganic investment that becomes a growth driver to incorporate customer-based technologies and commercial functions that are difficult to obtain with existing resources alone. Investments will be allocated between growth investments in the next generation to bring increased corporate value and returns to stakeholders. For inorganic investments, we envision building solid business alliances to contribute to customer infrastructure expansion. Meanwhile, for organic investment, we plan to develop new products, enhance its bases, and upgrade its IT infrastructure system for productivity improvement. As for human capital investments, we are considering investments related to skill improvement, recruitment, and compensation level improvement for human resource development, securing. Our shareholder returns policy is to incorporate DOE into our dividend policy and aim for stable dividends that are less susceptible to short-term profit fluctuations and changes in market conditions. We will explain our capital policy and shareholder returns in light of actual performance trends. ROE stood at 10.7% in FY 2025, maintaining a level that exceeds shareholders' equity cost demanded by the market. The equity cost is estimated at 6 to 8% based on the CAPM. We have set a target of an ROE of 12% or more in FY 2028, the final year of our mid-term management plan, toward achieving a positive equity spread. For our dividend policy, a payout ratio of 35% or DOE of 4%, whichever is higher, with progressive dividends as the default policy. We aim to achieve this target by the final year of our medium-term management plan. The actual payout ratio for FY 2025 was 32.9%, and the DOE was 3.6%. The forecast for FY 2026 indicates a payout ratio of 31.2%, excluding shareholder benefits. In addition, we will implement flexible purchase of treasury shares and maintain semi-annual shareholder benefits and benefits for long-term shareholders. I will provide an overview of our third basic strategy, advance in ESG management. We will ensure advancement of ESG management through proactive investment in human capital, promotion of DX, an expanded sustainability product portfolio, and a more resilient supply chain. In addition, we will advance response to issues faced by society to achieve both enhanced corporate value and social value creation. As part of our environmental efforts, we will expand our product lineup that contributes to reduced environmental impact and aim to achieve decarbonization targets. Our target is net sales of decarbonization contributing products, 2x versus 2023, and greenhouse gas, GHG, emissions, 50% reduction versus 2013 by FY 2030. In human capital, we will invest in stronger individual and organizational efforts, high efficiency through DX, and the establishment of a better workplace foundation. In our medium-term management plan ATOM 2028, we have promoted productivity improvement initiatives with an emphasis on value-added creation, and established creativity for added value as an indicator more conscious of the return of results to employees. We will aim for a virtuous cycle of value creation by focusing on maximizing the results we deliver and further increasing added value, while minimizing time and costs spent on operations. In governance, we will work on a more resilient supply chain, better effectiveness of the board of directors, and enhanced dialogue with stakeholders. Specifically, we will conduct an external third-party evaluation of the effectiveness of the board of directors and inspections of the governance system, and further strengthen internal controls at the group companies. I will explain proactive investment in human capital for advancement in ESG management. We will accelerate investment in individuals, the organization, and workplace foundations to achieve human resources targets in the medium-term management plan ATOM 2028, and continuously produce human resources who can generate creativity for added value. Specifically, we will nurture human resources who can evolve engineering capabilities and embrace the challenge of value creation. Also, we will foster an organizational culture that encourages endeavor and produces results through interdepartmental cooperation to construct a foundation for sustainable growth through a virtuous cycle of productivity and employee prosperity. Human capital KPIs include the number of persons with specific qualifications, employee engagement, and health management score, in addition to creativity for added value, which I explained earlier. We will proactively invest in these areas to enhance individual skills and organizational capabilities and develop a workplace foundation. In the previous medium-term management plan, we established a foundation for passing on know-how to younger employees through the Meister system. Under the new medium-term management plan, in addition to these efforts, we will further focus on enhancing individual skills by strengthening training programs to build technical capabilities and expertise, and by promoting the acquisition of qualifications. We will also review the compensation system to create a virtuous cycle of improved skills, compensation, and job satisfaction. Recognizing that our human resources are the source of our value creation, we will link our management and human resource strategies to enhance our corporate value. Let me explain the relationship between the medium-term management plan and materialities. In formulating the new medium-term management plan, we reviewed materialities in light of changes in the external environment surrounding the company. Under ATOM 2028, we have defined three basic strategies: value enhancement in business areas, optimizing capital structure and enhancing shareholder returns, and advancing in ESG management. We will achieve sustained growth by tackling materialities through three basic strategies. Particularly in an aging society with a low birth rate and a limited workforce, we will respond to market needs by strengthening human capital measures and positioning AI and robotics as important technological elements that support labor saving, automation, and high added value. Furthermore, we will focus on improved work quality and productivity through DX investment in conjunction with our basic strategy. We will achieve sustainable growth by appropriately addressing social issues in the context of these external environment changes, as well as by building a solid revenue base and upgrading our financial strategy. At the end of the medium-term business plan explanation, I will outline our medium to long-term strategy to increase corporate value. PBR is expressed as the product of ROE and PER. We aim to improve PBR and will continue to pursue both higher ROE and better market appraisal. First, we aim for improved PBR through better ROE and greater confidence from capital markets. Next, We work toward better market appraisal through improved growth expectations and lower capital costs. Finally, we work to promote understanding of business strategy and capital policy through the enhancement of IR activities. In addition, we work to enhance IR through measures such as the establishment and strengthening of an IR system while going about resolving management issues. In addition to these improvement measures, we will promote constructive communication with stakeholders as part of our IR strategy and strive to eliminate information asymmetry by expanding disclosure. From here, I will explain the highlights of our results forecast for the fiscal year ending March 31, 2027, based on the medium to long-term strategy mentioned earlier. For the fiscal year ending March 2027, we project net sales of 132.0 billion yen, plus 0.7% year-on-year, operating profit of 6.7 billion yen, plus 2.9% year-on-year, ordinary profit of 7.3 billion yen, plus 2.9% year-on-year, and profit of 5.3 billion yen, plus 5.5% year-on-year. Amid continued global soaring prices, mainly of imported raw materials and petroleum products, and an uncertain outlook, in this first fiscal year of the Medium-Term Management Plan ATM 2028, we will strive to pave the way toward achieving the aims of the plan. In the event of any reconsideration of the capital investment plan, or significant increases in supply prices or procurement difficulties, we will swiftly respond and make a prompt assessment regarding how it will affect the company's results. In addition to continuously reaching an ROE of 10%, we will raise it to 12% or higher by the final year of our medium-term management plan for sustained corporate value improvement. Furthermore, we will implement a planned reduction in cross-shareholdings and work to achieve capital efficiency while also striving to provide returns to shareholders. Let me explain shareholder benefits. We enhanced benefits following the share split. Specifically, we increased the benefit amounts and added long-term holding benefits. As a result of last year's changes in details, enhanced benefits of up to 10,000 yen per year are available, making them more attractive. Benefits are offered twice yearly, and the details of benefits based on the number of shares held are shown in the table on the slide. Shareholders can choose between an original Astro Boy QUO card and a donation. We will maintain our twice-yearly shareholder benefits program and benefits program for long-term holders to thank our shareholders for their ongoing support, enhance the appeal of our stock, and encourage more investors to hold our shares. I would like to explain our enhanced IR strategy. We will improve PBR through enhanced IR activities, in addition to business growth. In April 2026, to establish and strengthen the IR structure, the Public Relations Office, contact point for IR, was renamed the Investor and Public Relations Department, incorporated into the Strategic Management Center, and its staff was increased. We will promote proactive information dissemination through unified PR. In addition, in October last year, we implemented a major overhaul of the IR website and expanded disclosure for shareholders and investors. Furthermore, we are working on timely information dissemination through earlier financial results briefings and the release of transcripts in Japanese and English. We will promote enhanced dialogue with the market through enhanced dissemination of sustainability information, enhanced sponsored research coverage, and enhanced disclosure of IR materials in English. Through these efforts to strengthen IR, we hope to eliminate the gap with investor expectations. This concludes our presentation. Since April, we have strengthened our IR department and made our contact information public. We will do our best to disclose as much information as possible on our website. Thank you very much for viewing today's briefing for TSUBAKIMOTO KOGYO Company Limited. Financial results for the fiscal year ended March 31, 2026, and our medium-term management plan.
Thank you, Mr. Koda and Mr. Kasugabe, for your explanations. We will now move on to the Q&A session. We have a question. Changes in the international situation, such as tensions in US-China relations and instability in the Middle East, have made the business environment surrounding companies with global operations increasingly uncertain. How do you currently perceive the impact of these international developments on your business?
We recognize that the tension and deterioration in Japan-China relations, along with the uncertain international situation, including developments in the Middle East, are among the key management risks. At present, these international conditions do not have an immediate and significant impact on our business performance or operations. However, we will continue to carefully monitor currency fluctuations, supply chain disruptions, and heightened geopolitical risks. We will continue to monitor the impact of changes in international conditions on our performance and business on an ongoing basis and accurately reflect them in our earnings forecasts.
We have our next question. Cyber attacks against businesses have become a hot topic recently. What countermeasures do you take? Also, what is your policy for dealing with actual cases?
Damage from cyber attacks has been frequent since the last fiscal year and has become a serious risk for companies. We have long been working to strengthen our cybersecurity capabilities to prevent business shutdowns in an increasingly digital world. Specifically, we have established a system to protect our IT assets by installing security and antivirus software on our computer systems, primarily in our information department, and by continuously monitoring them. In addition, we conduct periodic training and educate employees using targeted attack training emails. Through these efforts, we are raising employees' cybersecurity awareness. We are also taking measures against ransomware, which has been wreaking havoc on businesses since last year. No infections have occurred to date, but we have prepared a backup system that can be restored in the event of an infection. In this way, we are striving to improve information security literacy and strengthen our systems while implementing measures to minimize damage.
We have another question. I see that you are improving your IR activities, but I believe that your efforts to address stock price issues are insufficient. Please tell us what you plan to focus on in your IR activities in the future.
We are committed to proactively engaging in dialogue with investors through IR activities that contribute to the sustainable enhancement of corporate value. Specifically, we have established a department dedicated to investor relations and hold regular financial results briefings and company presentations for institutional investors, analysts, and individual investors. We will continue our efforts to create opportunities, such as establishing a space for communication to build good relationships. Key themes with investors include business portfolio strategy, shareholder returns, and cash allocation, including growth investments. By carefully explaining these as our growth strategies, including our medium-term management plan, we feel that we have gained a certain level of understanding. We will continue to expand information disclosure, enhance IR activities, and further promote dialogue with our stakeholders.